Morning, Steve Ray in Chicago with the morning grain comments. It's Thursday and we'll get some export sales data. Looking for maybe 1 million tons old and new crop beans, 1 million tons old and new crop corn, and maybe somewhere between 400 and 600,000 tons of wheat. Overnight bean prices are a little bit lower, corn's unchanged and wheat's higher. Yesterday we had a pretty good rally in the wheat market. We've almost rallied now 30 cents from the recent lows. Part of it has to do with higher Russian prices. Their new crop price continues to creep up another $1 overnight. And we also see the French Matif futures up again today. Most of this due to talk about possibility of a lower Russian crop, a possibility of a lower European crop because of weather, and the fact that Russian domestic flour prices are record high and they could slow exports in July. So a lot of talk right now about the wheat corn spread. Right now, July wheat's $2 over corn here in Chicago. Some people think that we could actually see wheat gain another 20, 30, 40 cents because of the weather in Europe and Russia. And ultimately, given the drop in ethanol demand, higher carryout, and favorable crop conditions, corn could drop another 30, 40, 50 cents. So that spread could continue to widen wheat over corn. In the corn market, the ethanol data continued to show demand down 40% from a year ago, at least production down 40%. We are seeing a reopening of a few plants, but until there's a vaccine, you probably won't see gas demand pick up like it was before the virus. So that might slow ethanol production. So we would look for a bigger carryout for 2019 and 20. As far as crops are concerned, row crops, we've got some rains in the southern plains that'll move across the delta and into the eastern corn belt and southeast. It is interesting that it looks like parts of the eastern Midwest could dry out over the next 2 to 3 days, which is what they needed. NOAA will be out with their June through August weather forecast this morning, and we're expecting them to say we'll see warmer temps and above normal precip over that time frame. Our weather guy thinks June will be fine. July we could actually start seeing some ridging in parts of the Pacific Northwest and also some ridging in the southeast. The question is, will those two come together in the summer? Right now the answer is no, which will allow some showers to move across the Midwest every 3 to 4 days with warmer temps, which is probably ideal for crops. And then the other issues is cattle on feed. Friday the USDA will come out on feed numbers should be 95%, but placements is the biggest one, 77%. So the drop in demand from restaurants, the closing of some of the plants, all contributed to a real steep drop in placements. And we'll just have to see if the supply down the road is equal to the demand. Most people look for cattle and hog prices to drift lower because there is maybe right now too much supply versus demand, and China has slowed their buying of U.S. pork. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.